Okay, let's get the share screen going. All right, so welcome back, guys. All right, in this webinar, what I'm going to be discussing is uh, observations on price behavior focused around the principle of trading clusters on a chart. And before I go into the actual presentation, maybe to set a few kind of ground rules for this observation. It's very basic, and you've heard me say it before, which is that we use a number of different styles in trading, and sometimes we can combine these styles and we can find areas of confluence so that we can have more than one reason for taking a trade. Using clusters in order to determine price behavior or expected price behavior is one particular technique that we can use, and but probably for the sake of the presentation, if we remove from our minds what we know about trend lines in particular, and we'll just focus on this one particular technique and say, okay, what can we learn from this one technique, or what can we interpret about price behavior from this particular technique. And as usual, the way that I want to present it is that actually I'm not going to ask questions. I'm going to give you the answers first. I'm going to show you the observations, and then once we've seen these observations, we'll turn our attention to some charts, and we'll see if we can qualify the observations, or we'll see if we can qualify the theory that we're going to discuss by looking at charts and saying, okay, do these observations hold true, right? So that's the format that this webinar is going to take. All right, so let's get started. The observation is it's a very simple and straightforward observation about price movement and how price moves. And what we're relying on is that there are two structures inside of price movement, right? The first structure which you have is the breakout, which is represented by a strong momentum move in price, signified by this green line here. And the second type of structure that you have is a consolidation, right? And the momentum move, I usually call that a boost, right? And consolidation is consolidation, right? So we'll refer to the boost as a B and the consolidation as a C. But these are the two basic price structures which you'll have on a chart. You'll either have price breaking out, you get a boost, and then the price will go into consolidation. And understanding clusters and price behavior around the clusters just relies on identifying these two very basic structures that we have. Right now, the first observation that we have, or the first type of cluster that we're looking to trade, is that when we see a boost followed by a consolidation, our assumption needs to be that what's going to happen is we're going to get a continuation trade, right? So if the price moved up and it's gone into consolidation, we should not assume that the price is going to end up breaking back down. Rather, what we want to do is to assume always that we're going to get continuation, right? And this is the first principle, or is the first technique in understanding price movement, particularly when you have clusters. I call this a BCB, right? So you have boost, consolidate, boost, and that is the first type of structure that we're looking at. So when you see that on a chart, you see the price break out, you see it go into consolidation. Your assumption needs to be that from this consolidation, I'm going to get continuation, which means a move in the direction of the original breakout. All right, this is the first assumption which we're going to make, and this is the first price structure which we need to have in our mind. So we're looking for boost consolidation. When we see boost consolidation, we're looking for a continuation from that. The second price structure which we have is where you will see. All right, I think I need to clear the screen, right, and we'll come back to 1 second. Right, so okay, the second price structure which you will have is where you have boost consolidation boost, right? So the first structure we were just looking at the boost and consolidation, right? Now we've added to that structure, we say boost consolidate boost, and in this instance, when we've seen boost consolidate boost, what we're doing is we're waiting for the price to return to the consolidation area, and once price returns to the consolidation area, we will be looking for a continuation from that consolidation area, and that consolidation area will give us our trade, right? So in this instance, on a chart, all that we're looking to do is to identify boost, consolidate, boost. Once we've identified boost, consolidate, boost, pull back to the consolidation area, and that will give us a continuation trade. In terms of success rate, the boost consolidate structure usually quite successful. I would say about 7 times out of 10. You're going to get a continuation trade out of it. Definitely you'll have the ability to make some pips. Boost, consolidate, boost, and pullback. So this structure we call it BCB with a pullback. Right, boost, consolidate, boost, pullback. Usually it's about 100% successful. Right, I say usually. Right, it would be very rare and unusual situation if this pattern would fail. Right, it has a very, very high success rate. Right, so what I'm going to do is I'm going to show you these structures on a chart, and then we'll come back and we'll look at the theory for some more complex price behaviors around these structures, right? But now what you ought to be looking for: boost, consolidate, boost. When you've got boost, consolidate, boost, you get a pullback, and on that pullback to the most recent cluster, you're looking for a continuation trade, right? So let's flick over to some charts and have a look at what the charts are saying. All right, so here we go. So this is dollar Swiss, right? And a neat little trick which I have is just to kind of prove the point is that if someone has a chart in particular that they want us to look at, you can say it now. So this isn't going to be a setup, right? If anyone wants to look at a different chart, say it now. Otherwise, I'm going to start scrolling back on this and start showing you some structures. Right, you've got 5 seconds. 4, 3, 2, 1. Yeah, all right, you lost your opportunity. So I'm going to show you with a stacked deck of cards. All right, so dollar Swiss, and first off, if I just highlight the price structure, so we can see that the price was falling, and the price fell, went into consolidation, fell again, went into consolidation, fell again, and as long as you're looking for continuation of the direction of the breakout, you realize you're going to be making money off of this, or at least your analysis is going to be sound, or at least it's not going to be getting you into any kind of trouble, right? So The worst situation that you can find yourself in as a trader is that the price falls, it starts consolidating, and immediately what happens is you start thinking, well, it needs to go back, right? And it never does. Actually, what happens is that the price falls and it consolidates, and then it continues to fall. So when you see the price drop, when you see a breakout, and you see it going to consolidation, then the first thing that you need to be thinking is continuation, and that I'm going to try and catch a continuation trade out of this. I don't want to try and catch a reversal trade out of this. What a boost looks like on a chart actually becomes very, very clear, right? So you can see quite a sharp move in every instance when you have a boost, right? It's very, very apparent that you've had a breakout, right? It's not something which is hidden from view. And after having the breakout in each instance, what you're noticing is a continuation in the direction of the breakout, right? So here we have boost, consolidate, boost, right? Now, if we're looking for an example, of a pullback, then in that instance, what we do and the way that we chart this as you're going along in real time is that all you have to do is to mark off the areas of consolidation, right? So in each instance, we're just marking the last area of consolidation. So if we were charting from the fall, which started here in the upper 92 area, we see a cluster here. This cluster didn't necessarily follow a boost in particular, right? But we just mark it off, and the next area of consolidation that we see is here. The next area of consolidation that we see is here, right? Now, once we've done that, if we're looking for boost, consolidate, boost, pullback, continuation, if we've marked off the most recent consolidation area, when the price is pulling back to that consolidation area, we know we're going to be getting ourselves into a trade. So this was, as the price was falling, this would have been the last consolidation area that was marked. We can see boost, consolidation, boost, and when the price pulled back to that consolidation, it gave a continuation trade south, right? Now, when you're taking that consolidation trade south, I'm going to talk about some exceptions to the rule as well, right? So because price action isn't linear, you do have a lot of variables, and if the pattern is the last cluster is always going to give some element of support and resistance, but there are ways of identifying how much support and resistance you're going to get from that particular area, right? So I'm going to look at the exception in a bit, but first off, ordinarily, if you were playing the boost, consolidate, boost, when the price pulled back to the last cluster, you're taking your trade looking for continuation, you'd be targeting a region around the previous high for your first target, and then if the price is breaking beyond that, you'd be looking at that as a bonus, right? So ordinarily, if I'm using the BCB, I'm using it as a scalping technique. It allows me to get in with very, very low risk, and for example, if I was trading this cluster here, that cluster might be in the region of about maybe 10-15 pips in height, and what would happen is that my stop would be just above that cluster, and I wouldn't be looking for the price to be breaching that cluster. If the price is breaching that cluster, then I want out of the trade. If the price is penetrating deeply into that cluster, then possibly I'd be thinking, well, maybe I should be getting out of this trade, right? I wouldn't be looking for a significant kind of breach. I'd want it to hold a near enough pit perfect, but I would have to make allowance for that area as a zone, right? So we're looking here at a chart, and what we're seeing is boost, consolidate, boost, pullback, and that pullback is giving us a continuation trade in this instance to the south, right? Once you've got a jagged price movement, right, like we're seeing here, not seeing any breakouts not really seeing any kind of significant breakout bars inside of that jagged movement, the BCB no longer applies, right? So the important element of the BCB is the actual breakout, right? And that is what you're looking for. So if you're seeing actual breakout, you're seeing those sharp moves, always be thinking continuation. And I'm sure if we start relating experiences to each other, there have been an awful number of times when we've found ourselves on the wrong side of a BCB, and boy, it really kind of hurts, right? Okay, so looking forward at the chart, the next time we start seeing breakouts, and you can see some very kind of sharp candle movements, and just looking, right? Okay, maybe we've got a breakout here, and what we do is that we just box off the consolidation area, and the price continued to break after that. But when we got a pullback, surprise, surprise, look at where that pullback completed, and then you get another sharp continuation trade. If you're looking through any chart, any pair, any time frame, right, you'll be seeing these types of structures, right? So boost, consolidate, boost. Anytime there's a pullback to the most recent consolidation area, that is the place where we're looking for a trade on the back of trading clusters, right? So so that's the pattern, right? Now I'm going to show you how we'd be charting, right? So just marking off areas. Remember here I'm looking at the M5, right? So so I mean, you know, if we carry on taking the fall, and really what I want to demonstrate by drawing these boxes are the ample number of opportunities which price presents for taking a trade. And normally, if we're taking a trade, we've always said, you know, we want to take a trade because we have a very good reason to do so. We don't want to be taking random trades, and we always want to be taking trade at a price and a level where we have positive expectation and we have a reason for expecting that trade to go our way, right? So you know, we're not taking trades just because, right? And okay, you know, this is a good price, and we want to have a reason for taking that trade. We base that upon our historical experience of price movements, right? So if you want to practice trading clusters, what you have to do is to set yourself up on a clean chart. Take one or two pairs. You don't have to take too many pairs. And all you have to do is that every time you see a cluster, just box off that area and leave it, right? And spend a couple of weeks getting to know your chart. Spend a little bit of time spend a little bit of time understanding how the price moves between these levels, understanding that where does price stall, right? So if you've got price breaking out particularly strongly and you're looking at your chart and you're thinking, you know, where's this price going to stall? You can usually bet your bottom dollar that that price is going to stall at a cluster. It won't support inside the previous wave in the space where the price is breaking out. Rather, what will happen is it will come to stall in a cluster area. Okay, so we have boost, consolidate, boost. I suppose we'll boost, consolidate, boost. I'm going to demonstrate it going north, although we're looking at a chart which is going south, but I think that's okay. So we have boost, consolidate, boost, and say for example we've been getting quite a lot of moves giving boost, consolidate, boost, and it's been trending for quite a while, and we've been able to use the previous cluster. We've been able to use the previous cluster as a SR block in a bit of a trendy wave, and what happens is that the price pulls back to that cluster area, and so in this instance, what you've done is you've taken a trade going long, okay, and instead of price tracing back to the previous high, what happens is that you get a little bounce off of that cluster as support, and then the price goes into consolidation here, right? So what do? What you do in this instance, right? There are two things you can do in this instance. If you see the price consolidating like that, first thing you can do is to say, you know what, I was expecting a pretty straight move back up to the previous high. I'm not getting that, and the price has gone into consolidation, right? So we had boost, consolidate, boost going up. Now we've got boost, consolidate, and the direction of the boost was heading down, right? And in this instance, you close out your long trade because it's not doing what you were expecting it to do, right? So you've taken a trade based upon historical experience of how price behaves and how price moves around this cluster, and it's not doing that. The logical thing to do is to get out of this trade. Now you can reanalyze, and you could decide, I've got boost, consolidate heading down, and so what I'm going to do is that actually I'm going to use this consolidation and I'm going to sell, looking for a continuation to the downside through the previous cluster. And ordinarily here I would be looking for an ABCD type of target, right? So if AB is let's say 20 pips, then I would be looking for another 20 pips to the downside in the first instance, and then if the price goes into consolidation, then what we've got is a BCB going on, and I would be looking for a further move, again another 20 pips as that consolidation breaks, right? Although we will come back and look at this BCB structure in a little bit more detail in a while, right? But this is the exception to the rule. So you have a BCB, the price breaks up, it pulls back, it starts giving support, but it ends up going into consolidation. And so once we see it going into consolidation, what happens is that we're looking for a continued move south, and what we're determining is that the BCB structure has actually changed direction. What does that look like on a chart is probably going to be the next question. So what I'm going to do is, in fact, what I should do is I should take a picture of this. All right, so I'm just going to take a picture of this, and I will post it in the chat, and you can pick. I'll post it in the chat, and then you can, if you want to save that. Although I don't know why you'd want to, but if you want to save that and you want to have a look at it later, it's there. All right, so let's have a look at exception to the rule against again dollar Swiss is a perfectly good example. So if we're looking at the price structure, we're getting boost, consolidate, boost. Price is broken down, and the last area that we have, the last cluster that we have, is there. And if we're looking at actually what happened, the price moved up back to that cluster, and the cluster gave a little bit of resistance, and it went into consolidation, right? Once it went into consolidation, it ended up breaking north, right? So usually if you see that consolidation occurring just beneath the previous cluster, then you can expect that the price is going to end up breaking through that cluster, and that may give you confidence to determine that you've got a reversal trade on rather than a continuation trade, right? So if this was going to reverse from here, usually you would find you'd find quite a steady move down. You wouldn't find over a long period of time that it's going into consolidation, right? So so that's the structure that you've got going on here. Okay, that's the very basics of trading clusters. There are some more complex clusters that we can look at. In fact, I suppose no time better than the present, right? But these which I'm going to show you now, there's a lot of judgment involved. There's a lot of there's a lot of kind of interpretation involved, and a lot of what you decide will depend upon your experience with trading these, right? So the structure which I'm going to show you, in fact, maybe if we just do a quick recap of what we've looked at so far. So what we've looked at are some very basic structures, right? We've looked at boost, consolidate, and here our expectation, we see boost consolidation, boost consolidate. Our expectation is that we're looking for a continuation trade. The other structure that we've looked at is boost, consolidate, boost, and here what we're looking for is a pullback to the previous consolidation area, and when we get a pullback to the previous consolidation area, we're looking for a continuation trade from that consolidation area. And the third structure that we've looked at is boost, consolidate, boost, and the price pulls back to the previous consolidation area and goes into consolidation, and then from there we're looking for a move down, right? So these are the three structures that we've looked at. These are the three structures that we've looked at so far: 1, 2, and this third one, which potentially lets us know that the previous cluster is going to fail, and we've got boost consolidate going on in the opposite direction to the one that we had it going on in previously, right? So 1, 2, 3. Okay, now all right, let's just grab this, I suppose. All right, so we'll just grab this and I'll post it to you. All right, there you go. Okay. All right, this is the next set of observations around clusters, and it's a little bit more detailed, right? It's a little bit more detailed, a little bit more complex, and like I said, a lot of it's going to come down to the type of experience that you have. But nevertheless, you know, when you see something you recognize and something familiar taking place on a chart, it does give you an opportunity to trade. And I do use these structures, and I found I'm able to interpret them fairly well. So let's have a look. This is the price structure which you're going to have. You get a breakout, and following that breakout, you get consolidation, and then you get another breakout, and then you get another consolidation. All right. So the structure that we're looking at here is boost, consolidate, boost, consolidate. Right. BC. Boost, consolidate, boost, consolidate. The difference between this structure and the ones that we've looked at previously is just what's occurring here at the top end, right? So the price broke out, consolidated, broke out again, and went into consolidation. Just as a note, when we have a BCB pullback, so we have boost, consolidate, boost, the pullback tends to be a V-type pullback, or an inverse V, right? It doesn't consolidate and pullback; you get a V-type pullback, and that's the type of pullback that we're looking at for a continuation trade, right? So there's a difference. It's not a subtle difference. So if you're getting boost, consolidate, then what we do is that we mark the last two consolidation areas, right? So we've marked this consolidation area, and we've marked this consolidation area. and then what are we expecting in terms of price behavior, right? So over here there's three options. There's three possible scenarios that can take place. The first scenario is that after the second consolidation you're going to get a continued breakout. All right, and this is something that does happen, particularly when you've got a strong trend. It's not. This isn't a case of where you can say, oh, it's 50%, it's 70% of the time, it's 80% of the times a night. That if you've got boost, consolidate, then ordinarily you want to be thinking continuation. The only issue is where that continuation is going to come from, right? So the first expectation that we have is that we're going to get a continuation from this. And so this is the first scenario which has the potential to take place. How you would trade that is to actually play the breakout, right? So if you see the price break and you get an hourly candle, or depending on the time frame that you're looking at, you get a breakout candle above the resistance, then you say, okay, I'm going to give this chase and I'll put my stop below the below that consolidation area, and if the price is breaking below, then I'm out, right? So this is the first scenario. We're just looking for a continuation of that trade. The second scenario is that we get boost, consolidate, and after this second consolidation, actually what happens is that the price starts breaking down, and in this instance it will pull back. It will pull back to the prior consolidation area, and if it pulls back to the prior consolidation area, pretty safe trade is to take the long, right? So take the long, and it's a fairly safe trade. You have a well-defined risk, so if the price ends up breaking below that consolidation area, then you're going to be a little bit out of the money, but not significantly. So this second scenario makes for a fairly good trade, right? What's the target here? The target here ordinarily is a pullback to the upper consolidation area, right? So if the price makes the upper consolidation area, then consider yourself to have done fairly well, right? And that is going to be the target. If the price reaches there, you want to be out of about 90% of the trade, right? And it's possible that the price may end up breaking through the previous consolidation and going and hitting a new high. Okay, but that is not always the case, right? That's not always the case. It will happen sometimes, and sometimes it won't. But pretty much, if you've got boost, consolidate, and the price pulls back to that middle consolidation area, you will have a long trade, and the price will more or less reach the previous consolidation. It's I would say at least 70 or 80% of the time, right? So a very significant proportion of the time, the price will end up reaching that price area. And that's something that that's something that we can target, right? So what happens next, right? What happens next is that if the price isn't breaking higher, then what's going to happen is that that second consolidation area actually is going to start acting as a resistance block, right? And if it's holding as a resistance block, actually what will happen is that the price will break down, right? So what you've got here are three possible scenarios. You've got boost, consolidate. The first scenario is that the price breaks higher. That's a trade that we're able to take, chasing a breakout if we recognize this structure. The second is that you get a pullback to the first consolidation area, and we would look for a continuation trade from there. In that instance, our target would be the upper consolidation area, and at the upper consolidation area we're looking to exit the majority of that trade, and once the price has reached there, we want our stop to be at break even, right? We don't want to give anything back. We're not going to hold that trade with a huge expectation that the price is going to break higher. If it does break higher, it's going to be a bonus, right? It does happen, but you shouldn't have a very big expectation of it taking place like that. All right, and normally what you will find is that the area will act as resistance. That's something that you have to judge. It's not something that I would jump into aggressively. So this is our third scenario, right? The price pulled back to the previous consolidation area. Would I take that reversal trade? That would have to be a judgment call, right? Because it is possible that the price can break higher and work its way through that. So you have to watch the price action, and if you're watching the price action, you learn to recognize reversal patterns, and you tend to, and sometimes you tend to get a feel, right? So I can't always describe it in words, but you tend to get a feel if that's going to act as resistance and it's going to break down. So that third scenario, never take that aggressively, right? You always have to be a little bit conservative if you're seeing that third scenario taking place, and really or almost play it by gut, right? This is not a term I like to use, right? But you've got to almost play it by gut, and if it looks as though it's holding as a resistance area, then you can take your chances. And if the price breaks above, by all means go stop and reverse. Because usually if the price ends up breaking through that consolidation area, it will start acting as a support zone, right? And I would not have expectation once the price is broken through for it to break back under that consolidation area, right? So it can make a good stop and reverse kind of scenario, right? So these are some of the more complex formations which you see on charts, and what I will do is in fact, we can have a quick look now and see if we can find some of these structures on a chart and see what it looks like there, right? But it's worth keeping this in mind, right? So the structures which I showed you earlier on, very easy to trade. You just have to be thinking continuation all of the time, right? And it's possible to make a lot of pips from that. It's possible to do a lot of it intraday. I'm sure you'll realize the value of this very, very quickly, especially on a intraday scalping, basis. All right. This structure is a little bit more complicated. You've got boost, consolidate, boost, consolidate. You've got three different scenarios that can play out. Scenario 2 is the one which is most consistent. Scenario 1 is easy enough to play. Scenario 3 is going to be a bit of a judgment call, right? But again, if you start watching price behavior around these structures, it's not a very difficult judgment call to make, right? So I'm just going to capture that, and I'll post a link, for you. Right, so okay, there's the link. All right. All right, so boost, consolidate, boost, consolidate, boost. All right, so here we go. Let me just mark off the area that I'm looking at. All right. All right, so what I'm going to do is I'm just going to perform the exercise of marking off the clusters, right? So we can see a cluster there, we can see a cluster here, so look, we can see a cluster here. Let's quite an interesting one, right? And right, so we've got a cluster here, right? So that probably makes our ideal example of this structure. What we've got is boost. Oh, let's change the pen color. So I'm going to drop down the opacity a little bit, so hopefully we'll be able to see the candle through it. We've got boost, consolidate, boost, and price has gone into consolidation here. And so this is our BCB structure. All right, so we've got boost, consolidate, boost, consolidate, right? And in this instance, what happened is that the price pulled back to the first consolidation area, and that consolidation area acted as resistance, and the price ended up breaking down, right? And in this scenario, we can see that the price worked its way through the next consolidation area, pulled back, and like I said, it gave resistance, right? So once the price has worked its way through that second consolidation area, you know it's going to act as a resistance block and worked its way down, right? So so this is it's a very good example of the second scenario that we looked at. Okay, and in fact, if we keep on looking, we'll find a lot of these types of scenarios. You can see in fact just below it, we've got another example, right? So so we've got boost, we've got consolidate, boost, consolidate, and if we're marking off those areas, in fact, this one makes for a much more interesting example, right? So we've got boost, consolidate, boost, consolidate. The price pulled back to the first consolidation area. It acted as resistance and moved to the next consolidation area that ended up giving support, pulled back and again acted as resistance, and then the price broke down, right? So just by identifying the structure boost, consolidate, boost, consolidate, if we weren't looking here at the right hand side, and I know I'm showing you this a little bit in hindsight, I hate doing stuff in hindsight, but really what we want to do is to understand the theory, understand that this is a feature of price behavior, right? There's a price structure here, and that this price structure takes place over and over and over and over, right? So once you recognize that, then what it will allow you to do is to make these judgments going forward in time. So if we weren't looking at the here at the right hand side of the screen, and you'd seen boost, consolidate, and you just marked off the last consolidation area and or the most recent consolidation areas, then once the price pulled back, you know exactly what you would be doing, right? You know exactly what you'd be doing at this point. Okay. What I'm going to do now is I'm going to flick charts, right? So I'm just going to go to cable, unless anyone has suggestions for another chart, and I'm going to flick over to a daily time frame, right? And just show you the exact same structure taking place here on the daily time frame, right? So if we start here, let's start from the double bottom, I suppose, right? But as the price was moving up here, right, would mark the consolidation areas, right? So we can see the first consolidation area that we had was here. The next consolidation area that we had was here, and then the price went into a big old consolidation around there. And if we're looking at the price behavior, it's pretty much exactly the same, right? So what we've got is boost, consolidate, boost, consolidate, boost. Oh, okay, overdid it there. Boost, consolidate, boost, consolidate, boost, consolidate. The price pulled back to the last consolidation area, gave a very decent bounce from that previous cluster. Okay. and then it ended up breaking down, right? So the two areas we're interested in the boost consolidate, the most recent ones, right? Now, if we're looking at the current price structure, what are we seeing? We've had boost, we had a little consolidation there, a little consolidation here, and the price broke up. In a grand structure, we may have a big old consolidation going on here, and what's interesting to note is where this consolidation is taking place, right? And this is something which has been kind of playing on my mind, trying to work out the net directional bias in cable, right? So we've got a consolidation taking place just before a previous block, right? Which I find very, very interesting, right? Because ordinarily, when you get a consolidation taking place before a previous block of consolidation, what normally happens is that the price ends up breaking through, right, and ending up on the other side, and then this whole structure becomes a support block, right? So there's a lot which there's a lot which you can analyze, there's a lot which you can anticipate as a result of understanding the structures. Okay, guys, that's the webinar done. If you've got any questions, you're welcome to ask the questions now, and I'll try to address them. If not, if any time in the future you want to raise any issues about this, then you're more than welcome to. But as an exercise